Now, we are seeing the dollar strengthen a little bit today. So the dollar is beginning to move back up. If we look at Bitcoin, there's not a whole lot new today. We're still retracing. The question again for me, when I look at this chart on Bitcoin, is are we making a bull flag, which would be bullish for a move up here to 28.5 to 29,000, or are we going to retrace down here, which would be then bearish? So as a technician, I let the charts tell me. And the charts, again, it's too preliminary to know, but if we stay inside here, this would be bullish. If we start breaking lower, that would be bearish. And it's all about the formation. By looking at formations in charts, you know that in history, 1,000, 1,000,000 of these formations, 7 out of 10, 8 out of 10 of these, or 800 out of 1,000, whatever it may be, they work out in this direction. And that's what technical analysis is. All right, so
Twitter enters crypto realm. Twitter Payments gains license approval in Rhode Island, allowing legal storage, transfer, and swapping of digital assets, including Bitcoin. The move echoes Elon Musk's vision for X as an encompassing platform that integrates communication and finance, potentially revolutionizing digital interaction. Bitcoin ETFs, inevitable and price-boosting. CEO of DeVere Group predicts Bitcoin ETFs are inevitable after a landmark legal win against the SEC by Grayscale. Approval of ETFs could broaden investor access, increase demand for Bitcoin, and enhance cryptocurrency's legitimacy, potentially causing a price surge. First Bitcoin ETFs may arrive in Q1 2024. Binance versus SEC developments. Binance. U.S. appoints attorney Andrew Reese Davies as the SEC lawsuit unfolds. A new attorney is approved by Judge Amy Berman Jackson, while the SEC files a document under seal related to potential criminal conduct. Binance's legal battle and SEC actions continue to evolve, with potential broader implications. Now let's continue our enlightening discussion with Gareth Soloway.
We got the PCE data this morning, and you can see this headline, and I want to kind of draw the comparison here with the headline, right? So Fed's preferred price gauge ticked higher as inflation fight gets tougher. So this is kind of what I've been talking about. Now, we've talked about how inflation was trading and we're at 9%, and bringing it down to around 3% or so is the easy battle. 3 to 2 is the tough battle. And I'll go on record right now predicting that there will be a point in 2024 when we're still around 3% inflation and the Fed still starts to lower interest rates. There's going to be a new normal. The Fed has said 2% is what they want. They'll eventually adjust that to 3% inflation because it's going to be nearly impossible to get the cat back in the bag and get inflation at 2%. Now, when we look at this, it makes it sound like the PCE data was horrendous this morning. Yet the S&P market, the S&P futures, are actually positive. Now, they haven't really gone anywhere since the data was released this morning, but I want to jump over to this chart over here, or these data points. Now, here's the data points that were released today, and I want to show you why the markets are not really freaking out that the inflation fight is getting tougher. And we're going to go first to jobless claims. So we have jobless claims here, right? And, I apologize there. We'll get that back right there. So we have jobless claims right here. And the key on this, folks, is that you could see that today jobless claims came in at 228,000, and that was actually down 4,000 from last week, so week over week. And so interestingly enough, and we're going to get to the inflation numbers in a second, they're right down here, but the jobless claims, again, this is people filing for unemployment. They actually came down. Now, remember, we saw the JOLTS numbers earlier this week that the market really loved because the JOLTS numbers was people or job openings, and job openings declined dramatically. But we're not seeing the labor market weaken per jobless claims just yet. So I think that's interesting to take note of. All right, so next up, let's take the next point here, and I want to go into the next factor. And the next factor was the core PCE data. Now, the core PCE data came in at 0.2% month over month, but this is the kicker, all right, right here. What was the estimate? The estimate was 0.2%. And so even though we're generally seeing inflation being tougher to bring down, the market already knew that going into the data. So again, because this is equal to this, the markets aren't freaking out about it. Essentially, it came in at expectations. Going to the 12-month PCE, which is year over year, 4.2%. Experts had expected 4.2%. So right on alignment there. Lastly, we have personal income. Personal income did decline a little, which is a small positive. Well, listen, that's not fair. Personal income, in general, you and me, we want people to make more money. The Federal Reserve does not. The reason they don't want people to make more money is because it causes inflation to go up. All right, so they like the fact that it came in at 0.2% versus estimates of 0.3. It's a very minor thing, but that is a small positive. The other side of the coin is a small negative. So this was a small positive. This one, personal spending, is a small negative because personal spending dropped. And that tells you that the consumer and expectations were 0.7%, and it came in at 0.6%. And that tells you that consumers are pulling back just a hair on their spending habits. So overall, this one's a negative. This is a positive here. And then these came in basically in alignment. These were equal. And so again, what we saw with the stock market when we're looking at the S&P futures, the S&P futures essentially are not moving much.
Don't forget to join us as we explore the unfolding events. Coinbase PayPal partnership simplifies crypto buying in Germany and the UK. Instant crypto buying for Germany and the UK via PayPal. Other EU countries to follow soon. Binance's Send Cash, a new transfer service for Latin America. This development allows users from selected countries in the region to employ Binance Pay for transferring cryptocurrencies. Switzerland's SIBA Bank expands crypto with key Hong Kong regulatory approval. SIBA Bank and its Hong Kong subsidiary inches closer to regulated crypto services with SFC's AIP.
Now, we are seeing the dollar strengthen a little bit today. So the dollar is beginning to move back up. Now, after 3 down days in a row, you could argue that, okay, it was a little oversold. Maybe it's due for a little bit of a bounce. But this is actually a pretty decent bounce here. So I want to watch this today, because if the dollar continues to stay strong, does the S&P 500, does the NASDAQ begin to reverse the upside that we're seeing, which is very minor this morning, but do we start to come in to the downside? So that's something I'm watching very closely. Now, on a technical basis here, the only thing you care about with the dollar in terms of breakout or breakdown, we know that, see this area right here, okay? There's all these little tails right against here, and that's right where this low has been. So this is short-term support at around 103.10 right here if we draw that out. And then resistance remains right up here. We have the upsloping trend line. So if the dollar continues up, this is the level you want to watch that's going to be very influential. I would generally say anything in between this area is not a huge deal to the market. The market doesn't like new things. So the market would get scared if we break out on the dollar. And on the other side, if we break down in the short term, the markets would like that quite a bit. All right, let's continue on. So that's my first thing. The first thing I do after I see economic news in the morning. And I'm giving you guys my play-by-play of how I look at this stuff. So the first thing I do is I look at the numbers. And the important thing is to look at the data after the charts, because you don't necessarily know how the data, so I'm looking at the data, I'm interpreting it, but you don't know if you're right in your interpretation until you go to the charts. All right, so the dollar going higher a little bit today tells me that the markets are saying, okay, we really had a big rally and a drop in the dollar, right? The markets rallied up, the dollar dropped because of the JOLTS number, but the jobless claims number is not so bad. In fact, the jobless claims is telling us that the jobs market's not weakening here. Now, remember, we have the non-farm payrolls tomorrow. That is going to be insanely important. All right, but in any case, basically the dollar moving up is telling you that people are saying, wait a minute, maybe things aren't quite as weak as we thought.
Grayscale's legal victory against the Securities and Exchange Commission, SEC, renews optimism for a U.S. Bitcoin exchange-traded fund, ETF, boosting trading, investor sentiment, and overall financial markets. Bloomberg's top exchange-traded fund, ETF analysts, Eric Balchunas and James Seifert, now see a higher likelihood of the United States Securities and Exchange Commission, SEC, approving a Bitcoin spot ETF. In an August 30th tweet, they revealed that the approval chances have risen to 75% in 2023, up from 65%. They also noted a 95% likelihood for the SEC to approve the derivative product in 2024. And that concludes an insightful episode of Money Talks. If you enjoyed the video, Don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing!